The Daily Journal Corporation is a business made famous by its now former chairman, Charlie Munger. Of course, Charlie Munger, also the vice chairman of none other than Warren Buffett's Berkshire Hathaway. And the Daily Journal Corporation, in terms of a company, is one that has kind of flown under the radar for a long time. It has an exceptionally popular annual general meeting because it's basically a Q&A session with Charlie Munger, but not a lot of people really take the time to look at the underlying DJCO business. But looking a bit deeper, it turns out that there actually is a really interesting potential investment opportunity with DJCO as a stock. And it shows up in the portfolio of two investors that I have a lot of respect for, namely Matthew Peterson with Peterson Capital Management and Guy Spear, of course, of Aquamarine Capital. So in this video, I want to do a quick recap of DJCO as a business. I want to talk through some of the recent updates, particularly around management changes. And for the back end of this video, I want to get in quite a bit of detail going through a basically intrinsic value and expected return calculation for the Daily Journal Corporation. Now, these are my own numbers. Please don't take these as gospel. And if you are genuinely looking at DJCO yourself as a potential investment, do your own work on this particular situation, but I want to share basically my breakdown of intrinsic value and some of the different moving pieces for the Daily Journal Corporation. Now, I have covered the general structure of the Daily Journal Corporation's business in previous videos here on the channel, so if you want a slightly more detailed breakdown of some of the history of DJCO, just go back and check out some of the older videos on the channel around this particular company. But put very simply, there's basically three different elements to the Daily Journal situation here. Firstly, we have the original kind of legacy newspaper business, the literal Daily Journal. That's really a very, very small component of DJCO now. Makes maybe a couple of $1 million a year, but relative to some of the other parts of DJCO, it's really very minor. Secondly, we have a very substantial, actually, stock portfolio at the Daily Journal Corporation, and I'm sure you've heard about that a fair bit over the last year because it's the portfolio in which we saw Charlie Munger buy into Alibaba. That makes up actually a pretty substantial part of the overall market cap of DJCO. And thirdly, we have a relatively new and somewhat unknown component to a large extent of DJCO, which is Journal Technologies, essentially a courthouse software system. The Daily Journal Corporation is a relatively modestly sized company. It currently has a market cap as of recording of about $352 million. The enterprise value listed for the company is only $81 million, and that is because DJCO has this substantial stock portfolio. In reality, I think the enterprise value is actually a little higher, and I'll get into some more detailed calculations on that shortly. And that's basically because the stock portfolio has gone down in reality since DJCO reported their most recent numbers. Now, the Daily Journal Corporation for a long time was run by a gentleman by the name of Jerry Salzman. And Jerry Salzman kind of saw DJCO through several decades, actually. He ran the business for 44 years, and as Charlie Munger said, he basically did everything. And just this year, we really had two pretty significant changes in terms of management at DJCO. Firstly, Jerry Salzman actually ended up retiring, good on him, well into his 80s at this point. And he was replaced by a Canadian CEO and entrepreneur by the name of Stephen Myhill-Jones. Additionally, we've actually seen a change in role for none other than Charlie Munger. Charlie Munger has been the chairman of DJCO for a long time. He originally bought the business with Rick Guerin, who has passed away in the last couple of years. Rick Guerin was one of the investors written about in the famous speech by Warren Buffett, the super investors of Graham and Doddsville. And Charlie Munger is still on the board, although he is no longer chairman. And I have, again, done a video on that in the past. So if you want to go and check that video out, feel free. Long story short, Charlie Munger is no longer the chairman. He's still on the board, and he is still the main person responsible for Daily Journal's investment portfolio. Let's now get into the bit that you've probably all been waiting for, which is the intrinsic value calculation that I've come up with for the Daily Journal Corporation. Now, again, there's a few different elements to this. Part of it is the stock portfolio, and arguably the much more challenging component here is actually figuring out how on earth we put a value on journal technologies. So let's start with the stock portfolio. Now, there's some elements here that are actually quite straightforward, others which are much more challenging in terms of establishing what the stock portfolio is worth on this day as of recording. Now, of course, that sort of information comes out in the financial statements and the quarterly and annual reports for DJCO. But of course, stock prices are moving up and down all the time, and that can change very wildly in the short term. Now, some of the information about DJCO's specific holdings are available simply in their 13F filing. This is where we see, for example, that Charlie Munger has bought Alibaba through the Daily Journal Corporation. But DJCO also has some international holdings, the most well-known one being BYD, the Chinese electric vehicle maker. Luckily for us, Matthew Peterson has actually shared a lot of his background work on figuring out exactly what is in the Daily Journal Corporation's portfolio. Don't ask me exactly how Matt came up with those numbers, but I'm going to take his word for it and use some of the companies and the share counts that he provided in his most recent annual meeting. So basically the companies in the DJCO portfolio, at least as far as we know, are Bank of America, BYD, Wells Fargo, Alibaba, US Bancorp, POSCO, and then we also have sort of this general basket of other non-US holdings. Now, the tough part here is this other foreign holdings basket. As of Matt Peterson's annual meeting, that was valued at about $68 million. That was only a month or two ago. So I'm going to leave that valued at $68 million. But we can work through the other holdings and use the latest kind of closing stock price of this past couple of days. So if we go through that, we have Bank of America about $72 million. BYD, 66 million, Wells Fargo, 64 million, Alibaba, 23.6 million, US Bancorp, about 5.9 million, POSCO, around only $400,000, and the other foreign holdings, about $68 million. So that brings us to about 301, or a little under 302 million in total, which is down a little from only a month or two ago when Matt Peterson shared some of his numbers, where the portfolio value was closer to something like 350 million. Now, DJCO does have some other assets, and they also have some liabilities that are definitely worth noting as well. So on the asset side, they have about $11 million in cash. They also have, at least listed on their books, about $16 million in real estate. Now, as I understand it, that $16 million in real estate is a at cost value, and they've held that real estate for a very long period of time. So I wouldn't be surprised if that is significantly understated, but we will use 16 million for today. We also have a couple of different loans. So the main one being a $75 million margin loan. We also have a much smaller $1.3 million mortgage on that piece of real estate. And although it's not really debt, there is another liability worth talking about, and that is basically just deferred capital gains tax. Now, a lot of these companies, particularly the bank stocks, were actually acquired deep in the financial crisis in 2008 and 2009. So there is a lot of capital gain built into this portfolio, and if the portfolio was to be liquidated, DJCO shareholders wouldn't realize the full amount. They would have to pay some capital gains tax. So in Matt Peterson's latest report, that was listed at about $50.5 million. I've assumed that the capital gains tax rate for DJCO would be about 15%. So since the portfolio value has dipped a little recently, I've now got that estimated at about $43 million. So bringing everything together there, we have a $301 million portfolio plus some other assets, cash and real estate. We have, margin loans, a small mortgage, and some deferred capital gains tax. And if we take all of the assets and subtract all of the liabilities, that leaves us with about $209 million in terms terms of like a liquidation value for DJCO. Now, like I mentioned earlier in the video, DJCO's market cap is currently about 352 million. So if we take the 352 million and we subtract the 209 million that I just mentioned, that gives us an enterprise value of about 140 million, which, like I said earlier, is a bit higher than you might see listed on some websites. And that sort of implies a valuation for the dying newspaper business and for Journal Technologies of about $143 million. So at least by my estimate, if you were to purchase shares in the Daily Journal Corporation today, this is kind of a very basic like pie chart of essentially where your money's going. And by my maths, about 58% of those dollars are basically just going towards what I've generally called the net invested assets at DJCO. So that's the stocks and the real estate, and then kind of net of any cash and debt. That's about what that comes out at. And about 42% of your money is going towards the rest of the business. So we'll assume that the dying newspaper business is basically worth zero, and we'll say that about 42% of your cash would be going towards Journal Technologies. So the key question here is, what kind of return could you expect from each of those different baskets? And if you really wanted to dive a little deeper into this, I guess you could go through and research each of the bank stocks, research Alibaba, research BYD, research POSCO. For the purpose of this video, I'm just going to run through some general numbers of how I might think about an expected return out of the stock portion of kind of that portfolio. And then we'll talk a little bit about Journal Technologies in a sec. So let's just assume for argument's sake in this video that the stock portfolio of DJCO generates a market return of about 8%. Now, historically, DJCO's portfolio has performed better than the market. Obviously, Munger had exceptional timing buying some of the bank stocks and, deep in the financial crisis. He's done very well over time with BYD, not so well so far with Alibaba, but of course, time will tell how that one plays out. But just for argument's sake, let's say that the stock portfolio and the real estate, the small amount of real estate, earns, call it 8% per year. Now, although sort of the liquidation value of the stocks and real estate is about 210 million, they do actually have about 317 million actually invested because they've got some deferred capital gains tax and they've got a margin loan and a little bit of a real estate mortgage as well. So there is actually some leverage embedded in the situation here, which by my maths would push that 8% return to about a 12.9% return. Now, there are some interest costs. Obviously, there's no interest on the deferred capital gains tax, but there's some interest on the margin loan and on the real estate. So after you kind of account for those interest costs, that gets you down to pretty much exactly about a 12% return, assuming that the underlying assets can earn 8. The little bit of leverage after paying some interest would get you to about 12 on that kind of stock portfolio portion of the DJCO investment. And if we be really pessimistic here and make the assumption that the newspaper business goes to zero and even Journal Technologies goes to zero, there is a lot of inbuilt protection here that comes from that stock portfolio portion. So if we do earn that sort of fully leveraged like 12% return off the stocks, that 58% of the pie, if the rest of it turned out to be completely worthless, would still generate about a 6.9% for the overall kind of whole thing, even if Journal Technologies completely flopped. So next up, let's talk about the part that is really freaking difficult, to be frank, which is trying to figure out what on earth Journal Technologies is actually worth. And the thing that makes this really hard is that the Daily Journal does not actually talk in a lot of detail about what Journal Technologies is really doing. The main really valuable resource we have here to try and value something like Journal Technologies is actually just some of the scuttlebutt that Matthew Peterson's done. He's basically gone around several different like courthouses, not only in the US but also in parts of Australia, and he's managed to just kind of track down these very long-term courthouse software contracts that courthouses, spread all over the place have with the Daily Journal Corporation. And these contracts many times are structured in very unusual ways. They might be set up in a way to where it takes, a couple of years, maybe even more, for the software to be kind of customized somewhat to each particular customer. DJCO are eating a lot of that cost. and they're not actually getting any revenue on it until quite late in the piece. And these are very long-term contracts with a lot of kind of deferred revenue, and it makes it very, very challenging to figure out how much DJCO is actually generating today versus what they might generate in the future. But if we kind of take Matt's word for it in several of the presentations that he's done and, some of the information that's out there, he thinks there's a reasonably clear path to something like about $150 million a year in pretty sticky recurring revenue, maybe about 10 years out for DJCO. And then it kind of all comes down to how on earth do you value a software business producing $150 million a year in revenue? Now, there's a couple of comparisons we can look at. The main competitor in this area for DJCO is a business called Tyler Technologies. They have an exceptional record of growth and just kind of general cash generation and great stock returns and everything. So they're kind of the main competitor here, and it seems like although they haven't achieved it yet, they have kind of target margins of about 35%. They also trade at a massive multiple in the market. I think as of recording, they trade for a PE of like 80, which is kind of insane. So if we bump some of those numbers down to be much more conservative and we assume that DJCO, just for argument's sake, can reach that $150 million in revenue, let's use a 25% margin instead of a 35% margin, just again to give ourselves a bit more margin of safety. And let's put maybe a 15x kind of multiple on it rather than a 80x multiple. Those general assumptions get us to a value in 10 years for Journal Technologies of about $560 million. The implied price that we're basically paying for that portion of the pie today is about 143 million. So to grow from 143 million to 562 million is about a 15% per year compounded growth rate. And that, of course, doesn't include any cash that Journal Technologies is actually throwing off between now and year 10. That's just looking at sort of the terminal value of what might that business be worth 10 years out. Now, clearly, there's a lot of uncertainty here, particularly with the Journal Technologies component of this valuation. Matt has gone and done the scuttlebutt and done the groundwork, and he's built some real conviction, as I understand it, around what Journal Technologies could be producing in terms of cash flow in the future and what they could be worth in the future. So, there's certainly people out there with conviction. For me, I think there's still a lot of uncertainty, simply because I haven't gone out there and contacted all these US courthouses and tried to track down contracts and so on. But nonetheless, it's a pretty interesting equation. You have a big stock portfolio that might produce, double-digit returns with a bit of leverage over time. That can certainly offer some downside protection. You then have a software business that could produce, again, double-digit returns, maybe even more if they end up getting closer to the Tyler Technology type margins and market multiples. So that is my update on the situation at the Daily Journal Corporation, a really interesting company to follow. And I'd also be really interested to hear down in the comment section below what you think about the investment case when it comes to DJCO. One thing for certain for me is I will definitely be an avid watcher of the DJCO annual meetings, because regardless of the investment case, Charlie Munger will always be up there giving some great wisdom, but this is certainly one I will continue to keep an eye on. So I do hope you enjoyed the video. If you did, please hit like and also subscribe to the channel if you are new here. But that's it from me for this one, and I'll see you in the next video. Cheers.